What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about Priceline, ticker PCLN. We've got Priceline today, Snap tomorrow, Nordstrom on Wednesday. Thursday, we're going to do the morning after, and I believe Snap reports, I think Snap's Wednesday night, so Snap will likely be the focus of the morning after on Thursday. And then later on in the day, I'm going to have the good, the bad, and the ugly weekly trade review. So all sorts of stuff. Remember, guys, got a little bit of a delay. It's about 30 seconds from when I actually say something to when you guys hear it. But I do have the chat window up, and we are real time on the chat. So thanks, guys, for coming out. I see the usual suspects, Kurt, Trevor, Danny. How you guys doing? I've had a few emails asking about the live chat and how could we get the live chat in the video, so people can see that later on. And I don't know. I guess one thing I could do is I could always have the chat like kind of here, right, while we're doing the video. But I think that kind of takes away because I'm trying to focus on what I got going on over here. So I don't know the solution for that yet, but we're going to figure something out. Also, got some feedback from a few of you about some message boards and stuff that we might be able to utilize. So going to figure that all out too. Now, ahead of time, I'm going to apologize because I just had like a Monster energy drink, and I'm all gassy now. So if I burp, you can blame the Monster. It doesn't usually do that to me, but today I don't know what's going on. I'm just like, I don't know. It is what it is. All right, so let's go ahead and dig in here. Price consensus EPS surprise chart for Priceline. Now, you guys all know Priceline. One thing that's surprising to me about Priceline is that it just keeps on trucking. Again, this is another one of those companies where they're like, yep, we're never going to have a stock split. We don't care what the stock is. Just going to keep on going up. Pretty amazing. Black line corresponds to the right y-axis, which is price. The little green arrows are earnings beats. The red arrows earnings misses. I don't see any red. You see any red, folks? I don't see any red. The multicolored lines, there's red, represent the evolution of our Zach's consensus estimates over time. And you'll notice lots of growth in Priceline, pretty much always. And when estimates started to curve on down a little bit, the stock came under pressure a little bit. And really this year, Priceline's doubled going back to 2016. That's pretty amazing. But these EPS numbers have looked very good too. And now you got this nice positive flow for shares of Priceline as we're quickly approaching $2,000 on shares of Priceline. So what do I know from this chart? Well, they got a lot of growth. They consistently deliver on that, save for, some problems they had from mid-2014 till mid-2015. And stock just keeps going up. So these are all very good things. Let's look at the detailed estimates page, see if we can't get a little bit more. Surprisingly to me, based on that price consensus and EPS surprise chart, it's a Zach's rank number 3 hold. Value F, growth B, momentum of A. They're going to report after the bell mañana, so you got the rest of the trading day today and all of tomorrow to figure out if you want to take a ride on Priceline. This is one part that drives me crazy, and I guess I don't know. Maybe I'm alone in this craziness, but all right. So our Zach's industry rank. Basically, what we do for that is we look at all the industry components, gauge what their Zach's rank is, and give it an average, right? So if there's a bunch of threes, it's going to be a 3, and then that's the number, and then we compare that to the other 265 industries that are out there. So This one is in the top 37% of our Zacks industry rank, right? But then the sector rank, it's the worst sector. Like, how can you be a top industry in just a terrible sector? It makes sense, okay, right? Since you've only broken it down into 16 sectors, and obviously this is just a sliver, but what am I getting from this? I'm not getting anything. That's like, I guess, my personal little qualm I have with the sector rank. I've never been able to apply this, and when I show you guys, it's just too broad. Industry makes sense for me, I think, but the sector, I don't care, right? Anyway, okay, rant over. Now let's take a look at the revenue growth here. 13.27% revenue growth for the current quarter, 19.91 for next quarter, 16.44 for the current year, 14.88 for next year. So still big revenue growth numbers. Nice, very nice, but slowing. And EPS, we're actually going to have negative EPS growth this quarter. Didn't look that way from that little price consensus and EPS surprise chart we were looking at. Let me go back to that. How do you figure? How does that happen? So this is the absolute the current year number, and then so it must be a quarter, must be a write-off thing. I don't know. Interesting. And analysts, really, you got one analyst increasing over the last 30 days. Their estimates for the current quarter. Same for next quarter. If you look at the current year number, you got 2 brave souls increasing the current year, 1 dropping it. Next year, pretty much unanimous positive estimate revision. So that's good. So moving forward, it's going to look good. Overall effect to the Zacks consensus estimate. Current quarter's gone from 1072 all the way down to 880. Next quarter numbers 1445 up to 1557. That puts the current year number up from 7469 rather down to 7430. Now we're back up to 7513. Next year number's gone from 8568 to 8684 to 8749 to 8844 to 8849. So up, right? So that's good. So next year's numbers look good, but I'm worried about this quarter. And so the surprise, they pretty much are always going to beat. So 8%, 7%, 11%, whatever, beat, right? So expect a beat. And but why are these estimates so low for the current quarter, right? Let's go ahead and see what this thing has done in the past. It moves. It flat out moves. 5% last quarter, 10% before that, 3%, -8, 12, -8. And remember, these are always beats, right? So revenue, maybe? I think we need to take a look and try and find what happened in September of 2015 where the stock dropped $100. Let that marinate there for a second. It dropped $100, $126. Man, can you imagine messing around with options on that? I bet you there was some nice money to be made, and that's why we do this. This is an options trader stock, big time, because just look at the nominal move. Even a 5% move being $92, right? So the thing's going to move. It's going to be fun. Let's look at, you know what I didn't do, my friends? I forgot to pull up my little technical chart. So as always, well, it's not going to be always, because pretty soon I'm going to change this. But right now, I'm still using freestockcharts.com. You have to use Internet Explorer to do it. Some people were asking me, like, hey, I got Windows 10. I think we have Microsoft Edge now. Internet Explorer is still included in Windows 10. That's what I'm using here. So you're going to be all right. Anyway, because it uses the Silverlight plugin, PCLN, Priceline, and that's kind of funny because look, what were we just looking at? NASDAQ Composite, Priceline, NASDAQ, Priceline. Look familiar? Yeah, it should look familiar because they kind of move very similarly. You had a gap up here. So this must be an earnings gap, right? February, sure. So there's an earnings gap. That gap never got filled, but that feels a long way away. Stock basically has taken off from 1700 all the way up to 1900 here recently. Let's get some money flow on here. See where the money flows have been. So we've got positive money flows all the way in through to here. And then you get some negative flow with the stock on the rise. Interesting. This is going this way. And this is creeping up. Right? Now, one thing they do say about the money flow is that gaps, the money flow indicator does not like the gaps. It kind of throws it all off. So I don't know if that threw a monkey wrench into this calculation. It could have. But still, definite drop in the money flow while this stock is going up. What do we call that, folks? The bearish divergence. Again, that we're seeing here. Now, we saw that in Amazon. We saw that in Apple. Look at Apple today. Are you kidding me? Did that really just happen? Ugh. Anyway, back to Priceline. Okay. So, how about some fib levels here? Give us an idea. I think you got to go all the way from here. So we're talking 18, 17, 1746. I guess we'd really have to play in here, that previous resistance level. We do have a channel, sort of, the bottom end here. So a few levels to look for. These roughly coincide with these fib levels. They're pretty close. So I say that's the first target to the downside. Upside, I think you're going to have to be Captain Obvious and say 2,000. Let's see what the options market has to say about it. As always, so this is a $1,900 stock. At the money call, at the money put. This is the May 12th expiration, as these guys are going to be reporting after the market closes mañana. At the money call, 38.90 by 39.80. That's crazy. 90 cents is the spread here, but you're talking about $4,000 for a single contract here. Woof. Okay. So big numbers, guys. So 38.90 by 39.80. So let's just call it 39. I don't know. What was that? 90, 45, 35, 39.35. Yeah. And add that to the at the money put, which is trading 41 by 42.60. So we'll call that 41.80. 81. They're expecting an $81 move here on shares of Priceline divided by the $1,900 strike, and you've got the 4.2% move is what they're pricing in, or $80. $80 is what they're pricing in here for Priceline. Okay. This is going to be an expensive one. So let's first look at some credit spreads. Move it from the stacked, or from the side by side to the stacked. Keep it in this front week. What's our beat overall on this? I mean, do you want to jump in front of this train that just keeps on screaming higher? You know, that has continued to go higher? that has moved on earnings in the positive direction 3 quarters in a row, right? Let's just take a look at it. So $80 is what it's pricing in. So we've also got to change from the near the money to show all. Big time options chain here. Let this load up. This is going to be a big one. All right, 1900. So we got to look all the way out to 1980s if you're going to sell out of the money calls. I just for giggles, I want to price this. And again, we're going to do like we've been doing recently, where I'm going to give you credit spreads on bull side and bear side, debit spreads on bull side and the bear side. And look at how long bar chart is taking to load this bad boy up right now. Bar chart is not happy with me making them load this giant options chain. There it is. Wowzers. Holy smokes. Can you imagine, guys? Look at, like, who's down here at the 1100? Interesting. Okay. Keep on trucking. Let's go. Where's 1900? We can make it. There we are. Okay. Now we said go all the way out to 1980s. So that's what this market's pricing in. All right. And look at this. Now, just while I'm out here, remember what I was saying about this 2000? Bid and the ask. So here in the middle is the midpoint. Okay. It's going to be a little wonky out here because there's not a lot of liquidity all the way out here. 1,200 contracts of open interest, 292 have traded today. I think what we're going to do, ladies and gents, is I'm going to go ahead and move from this front week to the front month, just because I think there'll be more liquidity. There's a little bit of liquidity here, but if we can go out 1 week and get a lot more, that's going to make these bid and the ask a lot closer, potentially making for a more attractive trade. So let's go ahead and do that, and I'm sure it's going to take a little bit to load again, guys. So let that go. May 19th. Give it a little bit. Lots and lots of strike prices for bar chart to load up for us. That was much quicker. All right. Now we're rocking and rolling. And just looking out here, interesting. Not as much open interest on the monthly here. But if you notice, these bid and ask prices are getting a whole lot closer. So that's good. That didn't really happen, did it? The 1980s are at 12? No. Oh, come on, bar chart. You know what would be cool if I could just set like a range of these that I want to see a range of strikes on here. I could do that on other sites, but can't really do it on bar chart. Man, this is going to be one of those days where we're sitting here waiting for this thing to load, huh? I should have fired up. You know, if I would have known it was going to take this long, I would have fired up I'd have fired up E-Trade Pro, because that'd probably be going a lot quicker than this, but that's okay. Boy, these numbers are changing on me fast, huh? All right, let's just go ahead and look out here. So 1980. Now this is 12 by 1290, right? Now I want to go back to that May 12th expiration. Because I thought that was in the 5s, wasn't it? And these guys are reporting after the bell tomorrow 512. Okay, here we are. 512. It loaded up. Now let's go back to the 1980. $9.50 by 11. So, okay, that makes sense then. But here there's $1.50 on the spread between the bid and the ask, and in that front month it was only 90 cents, right? So I want to go back to that. We're going to go back to the May 19th expiration because of the smaller spread. Okay, does that make sense, guys? Because I don't want to get stuck with these super wide spreads because there's not as much liquidity. So liquidity is going to offer up tighter spreads, which should mean you can get filled at better prices and more realistic, given because we're not on a live thing here either. We're doing these are delayed a little bit, these options quotes, I think. So, but it just gives you some idea. Okay, that was a whole lot of explaining for nothing. Sorry, guys. All right, back to now. The 1980s are where the market's kind of pricing in, but that's just so close to this psychological resistance at 2000. I think if you're going to be looking to sell options premium out here, you might want to start at 2000 because just to give you an example, if you did the 1980, oh boy, if I knew how to draw, unbelievable. The 1980, 1982.50. I'm just gonna price this out for you real quick. So $12.45 is what you could get for selling that 1980 call, simultaneously spending $11.85 on the 1982.50. So that's a 60-cent net credit. Now compare that to the 2000. Oh, it is going to be considerably less. So let's see this. $8.30 is what you can get for selling the 2000 call, and $7.90, so only 40 cents. So that's pretty interesting. So you see how your risk versus reward changes dramatically. I don't know how did this get light? What happened? Is that a highlighter? Oh, that's the highlighter instead of the pen. There we go. So here we can get 60 cents, and this one is just 40 cents. Okay. So in percentage terms, they're both, the difference in strike prices on both of them is 250, right? So that means on the top one, you're going to have, what's going on here, calculator? You're going to be able to make 60 cents on 190 risk. So 31% is what you can make on that trade. And if you go at 2000, you're going to make 40 on 210, or just 19%. So you double your return. So I guess then the way to go for the bears is just go ahead and sell this 1980, 1982.50 call. So here we go. So we'll bear credit. Bears. Bear credit is short May 19th, 1980, 1982.50 call spread for 60-cent net credit. Okay? Okay. What's up, Dave? You want me to do a day after video for Priceline and reaction to earnings trade? I can't do it on Wednesday, unfortunately. So that's the only reason why. So instead, we're going to do the morning after on Snap. But this will be, we'll do 2 days after on this one, I guess, because this is Tuesday. It'll be Tuesday after, yeah, so Wednesday, no. Do we have tonight? Is NVIDIA tonight? I can't remember. When's NVIDIA? Somebody remind me. Okay, back to now. It feels like the longest page ever. These must be the puts, I assume. Yes, here are the puts. Okay, so now let's look at 80 bucks out of the money. So that would be 1820s on the put side. Yeah, NVIDIA is tomorrow also. So we've got NVIDIA and these guys tomorrow. You know what, guys? You probably would rather me do it Wednesday morning than Thursday morning, right? Maybe I can switch. Maybe what I can do is I can switch the Nordstrom stream from Wednesday morning until Thursday morning because they're going to report Thursday. So I could do them Thursday morning. Then I can move our morning after session to Wednesday morning at 9. Then I would be able to cover NVIDIA and Priceline. Maybe that's better. Dave, you might be onto something there, Mr. Newman. What do you guys think? Should I shift? Should we shift to Thursday morning and morning after the morning after session back to Wednesday morning? Throwing it out there, guys. Let me know if that's what you want to do. Okay, now back to the task at hand. Shorting the 1820 put. This is May 19th. You're going to get 1535 for selling the 1820. Then simultaneously buying the 1817.50. And that's 1470 there. So this one is a 65 cent net credit. Okay, everybody wants to shift. We're going to shift. All right, shift is done. We're going to shift. Cool, we're going to shift. Now, the bear... What is this? This is bull credit. Bull credit, short, May 19th. 1820, 1817. Put spread for a 65 cent net credit. All right, cool. All right, this is like the most difficult options chain to navigate, man. This is incredible. But I can't do the near the money because the near the money was just too close. Now we can shift it back to near the money because we're talking about the long side of the equation, right? Also, if we're talking about the long side of the equation, let's go to the June expiration. And let's see what we can put together here. Man, these are expensive. Look at that. Now, so what do I typically do, right? I take a look at where the options market's pricing in. So basically 1980 is what they're looking at there. And then I have a tendency to like scale it back and say, okay, what if it only goes 40 bucks? Put together a call spread there and see what we got. So let me calculate this. And then we're going to calculate all the way out to 1980. And we're going to see. So 1900 call, 57.95, going long the 1900. If you simultaneously short the 1940, 39.60. This is like an $1,800 call spread. Nobody's going to, I mean, how many of you guys are messing around with $1,800 call spreads? I know one of my goals here is I try to keep these like 250, somewhere like that, okay? So I'm going to find like a cheaper version here versus messing around with this, right? Because an $1,800 call spread, like I don't know how many of you guys want to put on an $1,800 call spread, right? That's what I was kind of showing. The credit spread might have been the good thing. Yeah. So who's going to do an $1,800 call spread? Yeah, nobody's going to do an $1,800 call spread. Ugh. Okay. So honestly, guys, I think if you're messing around with Priceline overall, you should be doing the credit spreads, okay? Just because the actual amount of skin in the game you're going to need to have is not going to be prohibitive. Here we're talking $1,800 on a long call spread, the 1940 call spread, right? That's crazy. And then going all the way out to 1980s, you're talking $2,200. I know you guys aren't going to put that on, so it's not even worth it for me to look at that. But here is an alternative for the braver souls that are out there. Now just hear me out. So I think the way to go here is there's two things you could do. You can either mess around with a calendar spread where we're going to go back and sell the front week and then go long the front month. That's one way to do it. And that can drop your kind of overall liability on this trade. Or we can do an out of the money call spread on the debit side. So does anybody still even want to see a debit? I guess one way to do this is you think, okay, so if it does move up, it's going to move all the way out to 1980. And you firmly believe that, right? And if you want to be right and participate in this with a call spread, if you're saying to yourself, yes, 1980 is what it does, and basically the safer side of you is saying, well, at the very least, this 1930, 1940, 1950 area gets hit. What you can do, and this is an option for you guys, is you can go out of the money if you want to be aggressive, and you can put together an out of the money call spread on this, and it's going to be a lot cheaper, but you have a much higher chance of losing your money here. The reason being is if Priceline goes down or goes sideways or doesn't go up a lot, you're going to lose all the money, right? But I do want to give you just at least a debit spread option just so you have it. So what I would do here is I would go kind of half of what this market is pricing into the upside, and that's where I would construct a call spread if I was hell-bent on putting together a debit spread here. So I'd go along the 1940. That would cost $39.60, the 1940 call. I would simultaneously sell the 1950 call. I'd get back $35.70. So my net outlay there would be $390. Still a little bit more expensive, yes, I understand. But my upside potential on this is $610. So I can make $610 on $390. I make 156%. And all I would need is shares of Priceline to close at or above 1950 at expiration in 2 weeks. Okay? So for those that are wondering, the, what do we call this? The bull debit is long May 19th, 1940, 1950 call spread for $390 net debit. Okay, and then you can do the same thing on the bearish side where you go a little bit out of the money. Remember, this market's pricing in sort of 1820, which is off of the screen. So if you're sort of this 1860 range, you do the 1860, 1855, or all the way to 1850, whatever you want to do. Let's just do the 1855 and give you some. Oh, did I say May? I meant June. Sorry. Yeah, you're right, guys. I meant June. So officially, the June 16th. So let me fix this. Bull debit is long the June 16th, 1940, 1950 call spread for a 390 net debit. Okay. Now the bear side is going to be a little bit cheaper for you because as we get down here, it's every $5. So I'd say the bear debit is long the June 16th, 1860, 1855 put spread for a 180 net debit. Okay. And I'll do the math on this. If you go long, the 1860 is going to cost $39.15. Simultaneously go short the 1855. So there's your 190 total outlay. The difference in the strike prices is $5 minus the 190, 310. So you can make 310 on 190 or 163%. And all you would need is shares of Priceline to close at or below 1855 at expiration. Now these numbers sound huge, right? But let me give you some perspective on this. So 1855 is here, and then the 1980s are up here, right? So considering this is a stock that went from 1750 all the way to over 1900 in 3 weeks, 2 weeks, that's not asking a lot of movement out of shares of Priceline. Okay, now overall, am I on the bullish side or the bearish side on Priceline? Now, let me tell you. A lot of these tech earnings have been coming out, and I've been on, selling out of the money call spreads has been the way to go for me. And it's working on Amazon, right? We were the 955. Apple is punching us right in the mouth today. So Apple's punching us in the mouth, and you had this sort of bearish divergence that, boom, it broke, right? So you have to, even though these are different stocks altogether, you really have to think about what's happening in the overall marketplace. And even though there was this bearish divergence here, that has been followed up by money flows coming back positive. Commodity channel index has gone from, it's still a little bit oversold here, right? So I think the way to go, and then we've got a couple of days of negative moves here for Priceline. We also do know that the this current quarter is not so good, right? In the detailed estimates page, we're talking about how this quarter is actually going to have negative EPS growth for this quarter. But I still think that it's very hard for me to be bearish on these tech stocks in general. So I have to be bullish here again on PCLN. So I do think that they're going to creep on up. So I think selling the out of the money put spread is a decent way to go. So that's going to be my official sort of stance here. Okay. Yeah, the trend is your friend until it ends, and as long as it goes up, you got to keep riding this horse. Okay. So I think selling the out of the money put spread is going to pay off for this one. And that was in the May. So we had a sort of a May, in the May chain. We were looking at that. So I think that's the way to go. And unless, you're feeling really brave and you want to go ahead and do that out of the money call spread, that's pretty, takes some chutzpah. The lotto, I think the lotto has a better chance of paying out this time than it does for some other ones. The lotto, we're gonna have to go to show all. It's gonna have to have 2 G's involved, right? Like 2,000 is gonna have to be on your radar somewhere. If you're talking lottos on PCLN. Come on, guys. Let's go. Okay. And how much? Look at this. This is crazy to me. Like, if you go out, there's options premium, there's bids here, all the way out to 2070 on PCLN. That's crazy. This is bonkers. These are going to be expensive lotto tickets. But I think your lotto play is like the 2020 call spread. I think that's the lotto. So, I think the lotto is long, the May 12th, 2000. This is just crazy that we're typing this in. 2020 call spread for 255 net debit. Okay. So your upside potential on that, like I said, it's 255 is how much you're going to have to pay for the 2020. Upside potential is difference in strike prices, which is $20 minus that 255. So 1745 on 255. So again, like a 7-bagger on this one. But Priceline would have to skyrocket up above 2020 for you to cash in on that. It's very risky business, my friends, but that's why it's a lotto. Okay? And that would put the stock into the, into a different stratosphere. Or into the stratosphere. But look, where's the market cap on this? That's supposed to be on my detailed estimates page, I thought. No, it's on my quote overview. Okay. So this is a $93.5 billion market cap, right? So if it surges $120, that's not that crazy, considering here's a 150-point move a couple quarters back, 130 in the March quarter, 140, 120. So it's in there, right? It has the capability to do that. So we'll have to wait and see. Okay, guys. So thanks for bearing with me here on Priceline. That was a tough one, man. We had to chew through that. Had this giant options chain that was just looming and just crushed through it. Just painful. Oh, just painful. That was a tough one. Very tough one to get through there on Priceline. But it's over now, so thank goodness. Tomorrow we're going to do Snap. Per your request, I'm going to shift the morning after to Wednesday morning. So we will hang out on Wednesday morning and do that. And then Thursday morning we'll do Nordstrom, followed by the good, the bad, and the ugly, and then Friday Home Depot. Okay, guys? So thank you so much for hanging out with me here today for Zach's Live Trader. And I will see you all mañana for Snap. Have a good one.